Hey traders, welcome to the Top Tier Outlook. Happy Sunday evening, everybody. We're taking a look at a very early view of the opening of the Asian session, the beginning of the new week, and the first session after options expiration Friday. We had a lot that went on last week, the big 50 basis point cut or half point cut from the Federal Reserve. We had options expiration, which really wasn't as volatile a session, frankly, because we had the post FOMC decision Thursday reaction, which was rather strong in the wake of that September 18 meeting. And then Friday ended up being what's known as an inside day. So let me point this out and what significance, if any, there may be to this. So whenever we have a large session, it's probably a little bit easier for the very next day or the very next candle to be, by comparison, stuck within it. So if you take a look at this big green candle, that's the range, right? And so anything that's trading within the high to low of that range, like this candle right here, trading below, right, is an inside candle. And all that means is there's really not a lot of reason to be bullish. We didn't take out the high. And there's not a lot of reason to be bearish. It's sort of a pause. It's just taking a breath. And when we see a candle like this, even though we closed down, is that a bearish candle? No, not really. And so we'll keep an eye on just this pause. And maybe the market's taking a breath. Maybe we need the next catalyst. Maybe traders and investors are looking out to the end of quarter, things of that nature. So that's really it. Not a whole lot to take away from Friday. It was not a big volatile day. Same could be said for the NASDAQ as well. There's your Thursday large up green candle, and there's the inside candle Friday. They came up after it. And frankly, anything that remains inside the range of this candle, which is right basically in here, there's your resistance right in here, there's your support right down in there. So as long as we stay stuck inside that high to low range, the way that I look at this is that we're really not going anywhere new. And maybe that's a question we need to ask ourselves a lot, right? Is this new? Or is this more of the same, right? Is there something new happening? Is there a new high? Is there a new low? Are there things that are happening with a new high or new low that tells us something about the trend? Does it break the trend? Does it simply correct the trend, right? So if we don't get caught up in the hyperbole that the financial media wants us to get caught up in, we just realize a lot of days in between larger moving days are kind of boring, right? There's not always something to do. And in between these large days, we rebuild our watch list. We look to see what pullback zones might be useful, and we wait. And that's probably the hardest part of trading, is that waiting. If trading is timing, then trading is waiting. So let's go take a look at something we did a lot last week. And for those of you that are in the Sector Secrets Mastery, you're probably very familiar with this view right here. And this is Koyfin. If you're ever wondering what this is, Rog, this is KOYFIN.com, Koyfin.com. And this particular site there's a free version, there's a paid version. I encourage everyone to at least check out the free version. I use this a lot. I think it's a really cool service. And the coolest thing about it is this normalized performance. And I use this a lot, right? And I look at watch lists out there. I see the way over the last couple of months. I love when this happens. All of a sudden, there's just this obsession about the Magnificent Seven. And then when I see discussions happening out there about staples and gold miners, and I see folks getting into utilities, I think, someone's listening. Folks are getting it. And it's not just about, what is NVIDIA going to do next, right? I mean, honestly, who cares? What is the current watch list? And when I see trades going off here, I think, we're reaching folks. They're getting it, because this is not the normal place that our attention is being driven to. We have to be far more attentive to where, the watch list contents, what names are on our watch list, what things do we want to trade, what things are going to have our attention. We've got to be really conscious of that and not just sort of migrate around with everybody else, out to the playground at recess. So with that said, if you haven't checked this out yet, probably the most interesting thing that happened last week was the fact that the laggards of September have really started to surge. And a couple of the things that we're doing. And, another thing I would love to normalize, getting traders to understand that what their favorite trade is not necessarily the most viable, not the one with the best follow through. I think a lot of you are getting it. And again, thanks always for your time and being here for the shows that we do Sunday through Friday, right? Top tier outlook on Sunday and then charts and coffee through the week. The other part of this conversation in terms of, what we're trading is, let's normalize. This is what I'm in, not this is what I think. And these are magical levels. What am I in? And what am I looking at getting into? Let's normalize that. I've kind of grown weary of trading analysis. I need another bit of market analysis. Like I need a lot of pound on the scale. Just don't need it, right? Just don't need it. Don't want it. This is what I have open. It's far trimmer a set of trades than I had before Powell. So what do? We optimize out of August into September for activity, for anticipation, right, into that Powell rate cut. And we're expecting largely a rate cut, right? We just didn't know if it was going to be a quarter or a half. And I hope when you think back on people talking about their analysis saying, oh, I didn't expect a cut, the Fed's not going to cut, realize how ridiculous and non-data based that is, because one look at the Fed fund futures made it really clear Powell had to cut because expectations were sitting there. And as we've talked about before, back in 2018, a very green Fed Chair Powell decided to ignore the Fed fund futures. And up until Q1 of 2020, by ignoring the Fed fund futures, by ignoring the monetary policy shift that the markets at large wanted and showed him they expected, he ignored it and caused the biggest sell-off probably in decades with that decision in Q4 2018 and the sell-off we saw in Q1 2019 until he went, whoops. That's literally what he said. He went on Bloomberg, for those of you that remember, and said, we're going to pause now. And that then began one of the swiftest rallies we had seen in modern markets. So really, really interesting lessons he learned that all of us that were watching that maybe not so pleasantly in 2019 said he ain't going to do it again. And he didn't. He delivered in a big way, probably one of his best press conferences. I know everyone wants to dog Powell, right? But probably one of his best press conferences to say, not only are we not panicking with this 50 basis point cut, this is to ensure we stay up ahead of the curve. Look, it doesn't matter what's true. When you're the guy in charge, where you're driving that monetary policy is where we're heading. So it always makes me crack up when folks say he should have done this and he should have done that. It doesn't matter what he should have done. It's what is he doing? And we trade that reality. And the more you get away from the folks who are just screaming up and down like crazies talking about this is what they should have done and the Fed's doing this, that's not trading, gang. That's Sunday morning, losing your mind over coffee television. That's not ever going to help us make money. As traders, we trade what we see, not what we think. And yet, it seems that television just gets bombarded by a bunch of folks talking about what they think. This is what I'm in. There's a reason I'm leaving this up here. I want everyone to get a good look at what the symbols are, what price we're paying for it, where we've scaled out. In other words, how have we paid ourselves? That was Friday's day trade, that GLD trade. And here are the trades from September. On Tuesday, a day after tomorrow, I'm going to be walking you through a lot more detail about some of these trades. What did we do in August? What did we do in September? I'm even going to show you a little bit about what I'm doing with the SPX. The whole idea is very simple, gang. Anything that does not start out the conversation with how do we grow an account? Hey, I've got an indicator. This is how it grows an account. Or, hey, I've got a process and this is how it helps grow an account. If the punchline is not, this is how it grows an account, we are wasting our time. And I think at this point, a lot of us are realizing, gosh, Rog, we've got a lot of indicators, a lot of them that I like. I know I've seen they can make some really great entries, and I can see glimpses of where I can grow my account, but I'm just not turning the corner. What am I missing? I'm telling you, it's not another indicator, right? If you're lacking certain types of indicators that measure structure, then I'd say, yeah, you need a way to kind of be able to take a read of the lake if you're fishing, or a lie on the ball if you're golfing, whatever it is, right? We all need a read. But once you've got that indicator set, sorted out, the next thing is, what is the formula of risk? What is the process to reward? How do we work a variable risk reward ratio that favors account growth? And that's really where a lot of traders are. So they're frustratingly having to, they're buying another indicator, they're testing another process, when in reality, it's really some basic formulas around what's in my account, what's appropriate to risk, and how do I continue to repeat that process. So there's an ability to grow the account. And, I look at where I am even now in my trading, and, I'm touching on a symbol that I frankly never thought I would. And, one of the things I really, really have to appreciate from my members in the Sector Secrets Mastery, and why I adore these people so much, is they were kind of saying, Rog, I have an interest in this, right? And they started wandering into this market, and they were coming back and really having hit or miss results. And I thought, you know what? There is some cool things we could probably glean from the SPX version of the S&P. But then I thought, and this is about 6 months ago, can I make it small account friendly? Can I do it without spreads? Can I do it with no pattern day trading, sort of containment? Can I do it with just long calls, long puts, right? And can those things be something that would be part of a formula of growing an account? And I really had my doubts. I kind of wanted to disprove it because I really didn't like the SPX. I did not like it was the popular kid in class, and everyone thought this was the only symbol to trade. And I kind of wanted to prove it was just 0DTE was junk and don't do it. And I found, actually, as long as we're prudent and specific about the setups and patient, we're not expecting one every day or two every day, but rather we know that if that setup does arise, there is a risk reward ratio to understand, and there's a potential for follow through that could be really above average. It is pretty great, but you got to be prudent about it. But I wanted to disprove the value of 0DTE SPX, and I ended up doing the opposite for myself. So I'm a believer now, but under very specific circumstances. All right, so let's get to it. Sandu asked, do I play options and futures? Yes. What are my time frames for the trade? It depends on the setup, whether I'm swing trading or whether I'm day trading. Most of my time frames were short term, 5 minute, but that's just for today, right? If I want to be a swing trader, maybe in a trade from 1 to 3 days to 2 to 10 days, I'll go to a 1 hour or a daily time frame. But I only look at 4 time frames: 5 minute, and I don't use multiple time frame confirmations. So 5 minute for day trades, 1 hour and daily for swing trades, and weekly for my buy and hold. I am Groot says, am I avoiding XLV? No, I'm in Groot. If you take a look here, I'm in Abbott. Is it my favorite? No, I don't. It's not my favorite, but it was getting very clear that certain sectors like XLV, like XLF, were starting to organize bullishly, and by the way, benefiting the S&P and the Dow. But there's not a lot inside of the XLV that I like as much. Johnson & Johnson was a monster trade for us a couple weeks back, but there's not as much now. And that's the important thing, gang. That's the thing we talk about so much in the mastery. We're going to touch on it in the webinar on Tuesday at 8 p.m. By the way, so again, I'm going to be showing you some of these examples on Tuesday at 8 p.m. You can actually register. I do have a link now. I didn't have a link for a really long time. I do have a link. There it is. It's simplertrading.com/reliable. Let me get that here for y'all. Yeah, there you go. This is the link I shared on the Friday video. simplertrading.com/reliable. And that's going to be Tuesday, day after tomorrow, 8 p.m. So one of the things that we found as we progressed through September is that the individual names in financials, the individual names in healthcare, which is important to the sector's follow through, really started to get pretty lackluster. It was just a handful of names that started to make sense. And as we started to wind down actually into OpEx and into FOMC, more and more of the names that I really liked were getting quite wobbly. So everything has to earn its spot, Gert. Everything has to earn its spot on the watch list. And it's a constant trial. You know, we talk about during the offseason in football, these players have to make the team every week, every day, depending on the time horizon. I have a series of names that have to make the team. Otherwise, I cut them. And that's the difference between traders still looking at, say, SMCI, for crying out loud. That was something that was great maybe the first 3 months of the year, January, February, March, and still to be talking about it in darn near in October. That's a process of poor watch list building, where something that did happen that was amazing, that was awesome, is not necessarily the now watch list. And that's probably the biggest thing a lot of traders struggle with, to be quite frank. It's that discernment and that ability to say, gosh, you know, I'll give you a great example. Johnson & Johnson was a huge trade for us in the mastery. And by the way, everything I share with you are alerts that we send out to mastery members, because those are my trades too. The other thing that it's going to, be tough for me to let go something like Coke. Coke has been a fantastic trade. Am I going to let it go entirely? No, but I'm not going to be as enthusiastic about getting into it as I was through most of August and into September. So that's where letting go of something that was such a big producer for account growth. I mean, take a look at the list. A lot of these names I may not come back to. I may not come back to Pepsi. I may not come back to XLP and Coke. I'll manage what we have right now, which are financials, industrials, the Russell, and Abbott. And again, what I'm in should tell you everything you need to know about why I'm trading it. You might say, Rog, there's no puts, right? What should I glean from that list? No puts. I'm not bearish, right? What sectors am I focusing on? Am I in the broader averages yet? Nope. I'm still focusing on outperforming sectors. So those are things that hopefully as you look at that, it makes more sense as to, Rog, you're bullish, clearly, long calls. And if you're looking at long calls, what sector? So take a look at those recaps that I send out. You'll see them in the free video section. We've been doing them this way for weeks. If you want to know what kind of trades we've been putting on, if you go back probably last month, on Tuesdays and on Fridays, I share with you all the recaps from the mastery. I send those out to those folks every day, but you'll see a couple of those snapshots at least twice a week. All right, what is my read on ANET? Dave, it's heading higher. It's making a new high. Is it an uptrend yet? No. It still has a lot to do before A, it shows me it's an uptrend, or B, there's even a setup. New highs, obviously, if you've been watching for a while, and I think you have been, Dave, I'm never going to get long up at 385. Maybe if it sinks back down to 360, if you've been following this show for a little while, those of you that know what it is that I do, as long as there's not a downtrend, and this is mostly, as you can see here, a neutral trend. What we want to do is take a Darvis zone like this and cut it in half. And if you want to even be more conservative, cut it in half again. And as long as we're not in a downtrend again, the idea is to buy either calls in the lower half of the zone or the lower quarter of the zone, and then look to take profit at the upper part of the zone. That is leg one of the trade. The second leg of the trade is the momentum breakout. That momentum breakout happened there right around 360. So that breakout happened on the 13th of September, sunk back down, and it hasn't looked back. So where we are right now is so far from even the last trigger, which would have been the 6th, right? So I show you these setups, gang. So if you are looking at something like ANET, you think to yourself, gosh, is now when I want to get in, or was there a lot more that I could have done back in here? And if I show you the pattern looks like, hopefully you can recognize the next time you have an opportunity like that. Or you're already in, Dave, which is what I hope, in which case, enjoy the ride. You've got the momentum leg of your trade going, and you punched up at this point to obviously new highs. All right. How do I determine my T1, T2s? If I'm long, I'm looking at resistance. And I know this is going to sound like a really simple answer, but it is a simple answer. If I'm long, I'm looking at where is resistance? What's the next obstacle? And if I'm short, I'm looking at support. What are the obstacles? And that's really what I'm looking for, right? What's in the way, and pay myself before I get to that level. So very much a process where when I send out an alert, I'm not sending an alert out and then having everyone in the Sector Secrets Mastery wait with bated breath as to when I'm going to get out. That's ludicrous. I see that all the time. Makes no sense. I'm going to tell you I get in, and then you're just going to wait staring at your phone for when I'll tell you to get out. No. What we're going to do is build a trade where you know what you're getting in, you know what you're getting out, and you know what the risk is, all at the same time when the alert goes out. Otherwise, that's as if I'm telling you to get to some destination. I'm not telling you what the destination is, but I'm going to tell you to drive down the highway until I tell you otherwise. Ludicrous, right? So if I'm looking at anything, if I'm looking at any kind of setup, remember, and even when you're building your setups for yourself, give yourself the information to build that confidence. And actually, forget the confidence for a second. Give yourself the information to be calm. I think confidence is great. We all want it. But the longer I trade, I realize I want calmness. I want some peace. I want to feel like I'm in chaos. And I don't want that anxiety, right? And that's where part of the SPX testing was very much, I want this to be a calm process. I want the levels to be really obvious. I don't want there to be a lot of question marks and, oh my gosh, Rog, what do I do next? It's one of the whole formula there. And that's really, as I go into my trading deeper and deeper, I think about, what am I going to be doing 10 years from now? I don't want chaos in my life, in my trading life 10 years. I want more and more, clarity and simplicity and time tested. Like I said, this SPX thing was tested for 6 months, and I'm going to probably continue to test it. Folks, the mastery will definitely see that ongoing. But after 6 months, I've got a really good idea of what a good setup looks like and what risk should be. And we've seen lots of seasons, right? Between April and now September, we've seen lots of behavior, like kind of lots of seasons of market behavior. As far as Intel goes, I know there's been a lot of news on Intel, Panthers. As far as Intel goes, it's really not on my radar quite yet, but I'll tell you the same thing that I was just mentioned to Dave, because it's kind of a similar situation where we've broken the trend. It's no longer a downtrend. Awesome. You've got this zone in here. As long as it doesn't turn back into a downtrend, buy a pullback. Keep an eye on 20. And then if you can build a position in this area, again, that's leg one to the resistance of the Darvis, and then the breakout would be leg two. This one's tricky because you're coming out of the downtrend, but it is no longer in one. A lot of news is shifting. Candles have gone from neutral to now green, which are bullish. So keep an eye on that halfway mark. Probably closer to 20, the better, but keep an eye on that halfway mark within the zone. And that's how I would treat a market that's ready for that breakout. I don't want to wait for the breakout. I want to find the conditions that the breakout would be most likely to follow through in, right? I don't have to wait to chase this thing higher with everybody else once it's so clear that, say, for example, we're trading above 23. What I want to do is think about how could I get in a way that would, A, position me to have lower risk, not pay up for the call, have a optional or scale out level before the breakout, and still have enough by way of contracts to take advantage of the eventual Momo. And if the Momo breakout doesn't happen, no problem. I've still got some unrealized profit, not an unrealized loss like a Momo breakout trade can sometimes have to deal with if we suck back down into the range. How do I capitalize on the range and use that to my advantage? Right. So the same thing that I was mentioning to Dave with ANET. Yeah, Panthers, I would say the same thing with Intel. All right. Next up is, what are my thoughts on natty gas? Yeah, whether you're trading NG futures, and thanks for the question on the futures, Pat. Whether it's NG or UNG or BOIL, it's gone green. It's above the 200. Green meets the gray. And this is really a big part of where you have a green candle, gray zones, right? That's what we're looking at. You want to find where the green meets the gray, and then you either want to get actually long natty gas. And by the way, you could place a limit order to buy inside the gray zone or use this as the price trigger and get long calls in whatever your favorite natty gas ETF may be, or heck, even the futures of natty. All right, let's see. What's a good level to get into gold futures? Well, if I'm waiting for a pullback, so this is something that I do probably a little differently. Every day, okay, I'm going to have a different zone because I'm not just looking at a static level, right? I'm looking at levels that are built based on what the market is currently doing and the historical volatility reaction to that. And the gold and the gray zones, they look unlike most indicators because they're not doing anything any other indicator actually does. So looking at historical volatility and then plotting the potential zones that the price could travel through, to and through, frankly. The idea here is if I have an uptrend, check, right? If I have green candles, check. Then I'm focused pretty much solely on that gray zone. And that's how the setup's going to go. So on Monday, I'm going to have a zone. On Tuesday, I'm going to have a zone. And this way, I have an active, reactive, live area where I'm expecting, based on historical volatility probabilities, that if we sink down there, we'll catch a bid. And that's what we're looking for, right? I want to buy something where I'm not alone in the trade. I want to buy something where I'm able to grab that call before the momentum kicks back in, but I want to grab a level where other traders, for various reasons, are also thinking this is a level where we want to buy too. Because remember, gang, we're never alone in a trade ever. All right. So that's what I'm looking at there on gold. All right. As always, gang, we usually run to about 6:20. So sorry for running over. Thank you, as always, for being here for the Top Tier Outlook. I'll be back tomorrow for Charts and Coffee. Some really good questions. I appreciate it. Thanks for that. Good stuff. Yeah, good stuff. Okay, gang, be good to each other. Enjoy the rest of your Sunday. I'm going to go do that myself. Started the day off with a great Singapore Formula One race. And I'm going to go have some dinner. Everyone enjoy the rest of your day. Thanks as always. Remember, Tuesday, September, here we go. Tuesday, September 20, what is that, the 4th? Yeah, Tuesday, September 24th, 8 p.m., simplertrading.com, reliable. I will see you there.